A group of athletes is getting into the business of farming. 24 or so figures from across North America's big four sports pulled together roughly $5 million for agricultural investments. The group includes big names like Joe Burrow, Blake Griffin, Kimball Walker, and more. The first purchase, a 104-acre soy farm in Iowa, and that's just the start, as the group is eyeing at least 4 more farms, including potential watermelon farms in Oregon over the next few years. Joining us now, Ben Maddox, Vice President and Head of Business Development at Acres, another company helping people invest in farming. Ben, thank you so much for your time today. So here we have a bunch of wealthy athletes getting into the farming business, but can anybody, we're talking regular Joes here with regular paychecks, get in on this action?
Yeah, absolutely. I mean, I think what's interesting about this story, Jay, is that it feels like a new event, and really farmland is one of the oldest asset classes out there. And so at Acre Trader, our company, we've been allowing individual investors to access farm and timberland investments for the past 5 years. And so really, these athletes are just catching up to a trend that's been in progress for a number of years already.
So these athletes are leasing the land to farmers and earning a single-digit percentage annual return on the investment. So just how profitable is this business?
That's a great question. So, I mean, obviously you can look at either profitability from a farmer's perspective or from a landowner's perspective. I think if you're looking at farmland as a owner, potentially, you should expect returns that historically have been between 8 and 12% annualized. And it's important to understand that part of that return comes from, actually leasing the property out, some sort of annual return, but most of it's going to come from land appreciation. And what we're hearing from investors today is that those folks who are thinking about inflation, or at least have inflation on their minds, that sort of inflation hedging element of land appreciation is something they're really interested in.
Let's talk about inflation, because we've seen the price of everything go up. Eggs in particular has skyrocketed in recent months. So how do market adjustments like that impact the investment?
Well, absolutely. So the desirability or the value of a piece of farmland is directly tied to the commodities and the prices of the commodities produced on that property. So, as you see the price of corn, soybeans, and in this case, eggs going upwards, that has knockdown effects on the revenue produced by that property. And so what farmers and landowners notice is that as the price of commodities goes up, the revenue from that property also goes up. And so there's a strong correlation between rising commodity prices and land values.
So bottom line, this is a pretty good opportunity to get involved in investment.
Well, yeah, so obviously never give investment advice, but what I would say is that for anyone who's interested in alternative investments, so they've seen what's happened in equity markets over the last year, and they're thinking about alternative investments, farmland's certainly at the top of mind of many potential investors, specifically because it's not correlated with the S&P. It has important inflation hedging benefits. And, it's a stable real asset. I think we've seen a lot of people back away from things that, maybe like the crypto world, right? And farmland provides a real asset, sort of in contrast to those digital assets.
Interesting stuff. All right, Ben Maddox, thank you for your insight. Appreciate it.